Okay, well, AU Small Finance Bank is with us as promised. The stock is slightly lower in trade. The numbers came through. Net interest margin is the slight bit of niggle here. We've got the management joining us, Sanjay Agarwal, Managing Director and CEO at AU Small Finance Bank. Mr. Agarwal, great to have you with us here. Good morning. Pleasure having you with us here on CNBC-TV18. You know, on all parameters, the numbers look pretty good. The one niggle, as I pointed out, seems to be the NIMs, which have contracted. Can we start there, sir? What happened?
So, Prashant, it's very natural that in this high interest rate regime, right, and we are a new bank, we are just in 6 years of our journey. So, when you're in 6 years of your journey, right, so you need to do something for your customer to really raise deposits, right? So, in that sense, I'm sorry.
On, Mr. Agarwal, we can hear you.
Okay. It's all right. So I'm sorry for this. So Prashant, we are a new bank in the journey of, right? We're just 6 years old. So we need to price our deposits, in terms of the other established bank, universal banks, we need to price them better, right? Otherwise, people won't give you deposits as of now. It could take some more time to build brand, product, service, all those things. So, and in this high interest regime, it will naturally happen, right? And we also deal with the customers who we don't deal much on floating rates. Our 65% book is your fixed and 35% book is your floating, right? So it takes the challenge. But I think last quarter, we also had surplus liquidity. So I think NIM pressure was supposed to come. I told my entire ecosystem that last year itself that this interest rate cycle movement will happen, for next 12 to 18 months, and we are into the cycle now, right? So, but it is for me now. There is a pause on interest rates hike, as of now, and I believe that once it gets reversed, so we'll get more benefit out of it.
Okay, Mr. Agarwal, good morning, and thank you for joining us.
Yeah,
but
good morning.
You see more pressure because, it's not that the pressure was not expected. As you said, everyone knows that cost of deposits went up. But this is from your highs, 6.3, you've come to 5.7. It's a 60 bips fall. So is there more?
No. Latha, so it has a two aspect of it because, we started commercial banking lending also, which is not a higher rate. We just lend around 10-11% in those assets also. So the mix is also getting changed. Of course, the benefit of
mix is getting changed. Mix is getting changed in favor of what? Large corporates?
No, that's we can't do that. Large corporates, right? We're still a small finance bank, but our 90% is retail asset, right? 10% is that. But in the sense that we were dealing around 25 lakh to 50 lakh like kind of loan where we deal around 14 to 15%. But the moment we moved around 1 crore to 5 crore bracket, we can't price that level, right? We need to price it at around 10-11%, right? So that's why, in last 2 quarters, it was around because of mix getting changed, And now, in a high interest rate regime, we need to borrow money, right? We need to take our deposit to the next levels. It's a mix of both the things, right? And I expect that most of that has been arrested by this quarter now, but there may be a case where, if there is a high interest rates going forward, then again, there can be pressure on NIMs. But largely, I will say we have already covered largely in our last one, this quarter only.
Okay. The other point of bother could be that in the interest to keep your margins, you go in for high risk, high return assets. And that may be showing already in your slippage ratio. It's slightly higher. As well, your GNP is about 10 basis higher. Is that a worry now? Especially, unsecuritized loans are the first to get impacted by higher interest rates.
No. Again, Latha, one thing I can assure you people from this platform is that we are known for our asset quality only, right? So there is no concern around it at all. I think it's more cyclic. We were around 1.66 in March, which is too good a data, right? And then it has to go a little bit here and there, which is 1.76 as of now. So there is not at all any worrisome there. Second, we don't do much unsecured, right? We have 1,000 crore of personal book and maybe 1,000 crore of our credit card book. Other than that, this entire piece is secured, So close to 95% is secured, right? 90% is retail, right? So I think we should not read much around it. There are sudden slippages, which is very normal in course. The first quarter generally happens like this, and this is the first quarter, after COVID and all those things, which is now getting stabilized, right? So I think we should not read much around it. We are absolutely in control of our asset quality.
Okay, that's good to hear. It's just that CIBIL also was raising some red flags on lower denomination loans. They had also raised the red flag.
We do secure, Lata, we do secure. Again, I believe that 95% assets are being secured. Secured in the sense from the primary security or a collateral one.
Okay. The cost of capital the total cost to income has still inched up a bit. Is that the highest, or can we see it? You had gone up from 63, I think, to 65% in terms of cost to income. Will you see it receding? Is this the peak?
Yes, I would say again, we'll keep investing in this franchise. We have built the whole digital franchise. We have built the whole commercial banking franchise. Already built a very decent branch banking liability franchise. Now we need to build the TBG group because we just got the AD1 license last quarter only, right? So I think the investment in the bank will continue, Lata, because I strongly believe that generally bank takes around 10 years to really be at size, scale, and stability, right? And we are just 6 years old now, right? So give us some more time, right, to stabilize it. But because 1% here and there, in a discussion looks very high. But once you do in operational level, right, 63 or 65 doesn't have much difference around it. So I would think that it would be in a similar level.
I agree.
The way we handled last year.
Yeah, but you said, banks take 10 years to stabilize. Do I hear an ambition to apply for a universal bank license then?
So, Lata, again, I would say, as I repeated many times, that we are playing our inning, right? We have to play on the platform which has been given by this country and the regulator, and we need to apply ourselves to the core of it, and it's up to the regulators and the country to decide.
No. I'm just asking if you will apply. Will you make a request anytime?
So aspiration will always be there, right? Because, when a cricketer played a Ranji Trophy, you want to play a test match, right? When he played a test match level, you want to play at a world level, right? So I think the topmost platform is universal bank, right? So there's no deny of it, but we are not in a hurry. We might take our own time and we do the core of this platform, right? And then look for that.
Okay. No, I'm asking you because your capital consumption has been a bit significant, 2 percentage points reduced on CRAR, though it's still very high at 21%. Would you look to raise capital because at least the stock markets are very kind to financial stocks?
Not this year, Lata, not this year, because we already raised some good amount of money last August. So not this year, not this year.
Mr. Agarwal, just to kind of circle back to the point on margins. So what are we looking at, sir, for FY24, if you can put a number to it? And also on some of the other parameters like loan growth, what should we expect in FY24?
So, Prashant, I would say that we want to repeat the last year performance and we really want to remain very cautious because I'm in the industry for the last 28 years, and at good times, certain time you make mistakes, right? So we want to have 3-4 clear-cut strategy which says that deposit-led growth. So we really want to grow our deposit in the range of 25 to 28%, right? And then we really want to grow our asset in the same range. We want to have our profit growing by at least 25%, right? And I think this is the larger things, but I think in terms of content, we really want to operationalize our AD1 license. We really want to stitch our digital bank again. We really want to have one more vertical in the bank, which is for rural and impact banking, right? So I think these are some other content where we are working on because generally we discuss only about deposit, asset, NIM on this course, but I think there are so much of other content also in the bank, and we are very new on the system, right? So
absolutely. Just so a 25 to 28% growth in deposits and advances. You said you'd like to maintain margins around the last year levels. That you were just under 6% last year. So,
No, so again, there would be some leverage, and I would say, you say NIM, I would say in the range of 5.5 to 5.7, we want to target it. But I think the other income can play a very important role this year. So we might have similar level of ROE and, of course, the profit growth.
Oh, other income in what sense will give you more money?
So I strongly believe that insurance income has got rationalized.
Okay,
That is the one uptake. Then we will operationalize our AD1 license. We are now close to 4 million customers. We will cross-sell them more. Our productivity will go up because we are not hiring too much nowadays. So I think all put together, I strongly believe that we should do the same return ratios like last year.
Okay. Oh, that's good to hear. Ultimately, that's what investors want. Thank you very much, Sanjay.
It's very long-term journey, right? So,
of course,
quarter to quarter doesn't have any meaning for me, to be honest, because I strongly believe
that would be true. That would be true of all corporates. That would be true of all corporates, Sanjay. But the law of the land requires a quarter-on-quarter result reportage.
Yes.
Thank you very much indeed for joining us, and all the very best.
Thank you. It's always fun talking to you. Great.
Okay.
Thank you.
All right, so the quarterly result, of course, did show both on asset quality and on margins a bit of a hiccup, and that's what the market is reacting to. We take a quick break, and we're going to be joined by the RBL Bank Management. Subramanya Kumar, Managing Director and CEO, will be with us.